This is Robert Eldridge with annuitycampus.com. I'm going to talk about permanent life insurance, but I'm going to really target on whole life insurance, which is what they call dividend paying or participating life insurance. I saw a recent lady commentator who's on Saturday nights on CNBC talk about, she actually told someone a flat out lie, and I have to make things right. Here's the deal. If you're trying to buy a term policy, great. Term policies, I use them in my practice for people that just need a solid death benefit. Robert, I need $500,000. Bam, I give them a term policy. The reason why I do that because it's less expensive. So I agree with her when it comes to that. However, she slams all whole life policies, and I just think that's not right. Here's what I would ask you. If you're contributing to or matching the match, if you still have a 401k at work, match the match. It's free money, okay? And then you have $4,000 or $5,000 that you can add to a Roth or traditional IRA every single year. If you've done those two things, and we already solved for the death benefit, and you have some discretionary income, then whole life policies are dividend-paying policies that have some very unique features on them, okay? And what I mean by that, let me ask you, are you going to buy a car in the next 5 years? And if you're a business owner, are you going to buy business vehicles or add staff or buy equipment for your business? Are you going to buy houses? If you said yes to any of those things and you purchase things in the world and you finance anything in the world, then a whole life policy does work for you. All you're doing is repositioning the assets. And let me get a little bit more deeper into this so that way you understand. Whole life policies, you buy the lowest death benefit you could possibly find, okay? And then you overfund it, which means you're adding a premium to it, and you're funding your own bank, so to speak. And what happens? Sometimes it takes 5 to 7 years to fund your own bank. Maybe you need to fund between $20,000 and $30,000 individually. Now, business owners and people with more money obviously put, $40,000 a year, easy, or a lot more, and that's a little bit more complicated. But I'm just stick with the average person. So let's say you put $500 a month into it, and that $500 is going to the cash value, not the actual death benefit value. So you get $6,000 a year times 5 years. Okay, that's $30,000. So you have $30,000 in there. The company that I choose are usually mutual companies, and the reason why you do that is because a mutual company is every time they make a profit every year, they give it back to you in the form of a shareholder. Oh, so it's free money. Duh. So you get that money. Now let me ask you another thing. If you take money out of your savings account or checking account or your IRA, what happens? Well, first of all, let's disregard the penalties. That money's gone, and you use that money to buy a car, or you use that money out of your savings account to go buy a house, correct? Well, how would you like this? How would you like to take the money out, hypothetically, buy the house or cars, and the bank still pays you as if the money's still in there? Well, of course, we'd all sign up for it, right? Well, on certain types of life policies, I'm not going to use the term because my competitor's out there, but you could take the money out, and it'll still grow as if the money's still there. So, for example, if you go buy a car, say you go buy a Ford dealership, buy a $30,000 vehicle. You have $30,000 in there, you take the money out, and you go to the Ford dealership and you say, hey, I want to buy that Escape. Well, what's the interest rate? Okay, so you think in your head the interest rate. Alright. What's the principal amount? Oh, it's $30,000 or whatever. Okay. So instead of paying the finance company, the bank, or the credit union the money, you're going to pay yourself back the principal and interest. That's the key to this whole thing. So what happens? You're funding this bank, right? The money grows, you take the money out, buy the stuff that you're going to buy already. The difference is you're paying yourself back the principal and interest. Oh my God, so what happens to your cash value down the road if you keep doing this over 20, 30 years or whatever it is for your business? The cash value goes straight up like this because of the fact that you're still funding your bank, but you're also buying and financing your own purchases. And if you're a business owner and doing this, you get to charge yourself the interest rate that you want and write it off. That's the difference. So most business owners, if the current interest rate's 4, they're going to charge themselves, 5 or 6 at least, and write that off towards their business. Oh my God, And then what happens is eventually people have multiple of these. So as you can see, you could finance your own bank and purchase your own vehicles, your house, whatever it is, but you got to obviously pay yourself back. That's the key. If you don't have the discipline to pay yourself back in your bank, this is going to collapse, okay? You got to do it, and it'll work for you big time. I've seen it happen. And I've seen dentists borrow the money against their policy, go buy a building with this stuff, and they pay themselves back. So the kicker to this thing is this. After you do all this and you pay yourself money back, what happens? You've built your cash value to this extreme level. Oh my God, now I'm 65, 70 years old. I'm going to use that money for retirement now. So you've financed all your stuff all your whole life, or a part of your life, or the latter part of your life. You've built up, maybe let's say $500 to a couple $1 million worth of cash value. Now there's ways to draw on that income where you're not getting nailed by taxes every single year. See, guys, you can't just say whole life insurance stinks, and that's why I have to rebut what this lady says to people. And just because you have non-resident insurance licenses in multiple states doesn't make you an expert, okay? What makes an insurance agent an expert is the fact that they can look at something and see the positive and the negatives, and then figure out which will work best for each client, okay? So that's why I wanted to shoot this video today, because I think term life is a wonderful vehicle. Whole life is a great vehicle for people that know how to use it, and there's a lot of different things. They're a little bit more sophisticated, but I gotta tell you, to overfund a whole life policy, to switch your buying habits, so at the end of the day, when you're older, you have this cash value there, and you can use that money for your retirement. And let's say you don't need the money for retirement. You have this huge cash value there that can go to your beneficiaries. That's huge. Or you could take a paid off life policy like that, go to a bank if you want, and say how much you give me for this thing. Because there's no greater asset in this entire world than a whole life policy with huge cash value in it. Especially paid off whole life insurance policy. And the reason why I know this is because Warren Buffett's been doing this for 20 years before Wall Street caught on. Warren went out and his company and bought all these life insurance policies on people. Alright? Guess what the banks are doing? It's called BOLI, bank-owned life insurance. The reason why they do that is because why? When people pass away over the years, the banks or individuals are going to get paid this money tax-free. Huge loophole, but it makes sense. So, for the average person, I say, look, get a term policy, gotta have it, no doubt in my mind. The thing is, you also gotta have your 401k, your IRAs, and then after that, we can do some really cool stuff with your money. And if you have any questions on insurance or annuities or rollovers, I'm an expert in this field. As you can tell, I get pretty passionate about it. I just hate seeing people strike something down with a broad stroke and not really explain to the public properly why they're saying what they're saying. And I just think that's the wrong thing to do. So this is my forum, and I get to vent and tell people what the real truth is. She's got her forum on TV. This is how it's going to work. Anyway, give me a call. Appreciate it. Be happy to give you a consultation to see what works best for your situation. Because at the end of the day, it's about your situation, not what's best in the best interest for insurance companies and other people. It's what's worked best for you. Have a wonderful day. Appreciate your time. Thank you.